Hi there, welcome back to my channel, Investment Mindset. Today, I'd like to give a shout out to Cheng, for he has written in to me yesterday to request for another video on Catcha Digital Berhad to share my latest thoughts on this stock. Full disclosure, I am currently invested into Catcha Digital Berhad. This shall mark the fourth video I am doing on Catcha Digital Berhad stock, and if you are also wondering why the lack of performance in Catcha stock lately, make sure you watch this video till the end. And in return, I would appreciate to receive a like from you, as making videos do take up lots of efforts and time. Thank you in advance. Now let us dive into it right away. Catcha Digital Berhad has come a long way since its grand plan of lifting itself out from the GN2 status. Catcha Digital Berhad slipped into the GN2 list way back in August 2017 due to 70% or more of its assets consist of cash or short-term investment on its balance sheet without much core business, as shared in my past first video on Catcha more than 3 months ago. As mentioned by the company previously, issuance of the rights issue shall indicate the final steps of the company regularization plan to have its GN2 status lifted and for them to continue to execute its strategic plans and explore new opportunities that will drive its growth in the digitals and technology industry in Southeast Asia. On 14 June this year, Catcha Digital Berhad has fixed its renounceable rights issue price to be at 23.5 cents per rights, with ex-date being 27 June. And issue rights is an invitation to existing shareholders to purchase additional new shares in the company. Under this Catcha Digital Berhad's rights issue, you can choose to sell the rights issue itself with effect from 30th June till 6 July this year. Or you can choose to exercise this rights issue to buy its underlying stock at the strike price offered, which is at 23.5 cents per share, anytime by 30 July this year if it is in the money, which means that the underlying stock is trading higher than 23.5 cents. And I did receive the renounceable rights too, and I may choose to exercise it if it is in the money by 13 July this year. On 28 March this year, TA Securities and Malacca Securities announced that Bursa Securities had, by its letter dated 27 this year, decided to grant the company an extension of time up to 5th August 2023 to implement its proposed regularization plan. Once this long-awaited regularization plan finally panned out, and Catcha Digital Berhad finally able to unbind the company from the shackles of its Guidance Note 2 status, we could expect its stock price to start to perform as the way to reward its shareholder for their tremendous support shown all this while, which would include me and you if you are also buying into Catcha Digital stock. Hence, from now until the rights issue exercise date, I do not expect to see much movement in Catcha stock prices. Catcha stock price would mostly be consolidating around 23 to 24 cents until after the rights issue exercise date and finally the listing of the shares onto Bursa, which is expected to be completed by 31st July this year. After that, only I would expect to see more life and movement in Catcha stock prices in anticipation of the GN2 status to be lifted up soon, since the company only has new timeline till 5th August this year to fully implement its proposed regularization plan. And now looking at Catcha monthly timeframe chart, we could see clearly that the stock price broke out with high volume in the month of March this year to record a monthly all-time high of 34.5 cents before retracing back down to 24 cents as I am recording this video today. Now I want to bring your attention to its monthly timeframe chart volume. As we could see thus far in the month from March to May this year, there has been a net buying volume, and only June did we see a net selling a bit quite low in terms of volume. This is positive to me, meaning majority of shareholders are still holding on to Catcha Digital Berhad stock, probably waiting for Catcha Digital Berhad to get itself listed up from the GN2 status and an anticipation of a rally in the stock prices thereafter. But since this is a monthly timeframe chart readings, we will need to wait longer for the stock price to play out. Do take note that Catcha Digital public float is pretty low, under 100 million. With such a public float size, a stock price could see massive move to the upside or downside easily versus a stock with high public float. The first target upside for Catcha Digital stock is to be at around 29 cents and second target price at around 39 cents. Strong support at 22 cents. If it breaks below, expect further downside to 19 cents. Recently, Catcha Digital Berhad also announced high growth where its wholly owned subsidiary iMedia recorded a profit before tax of Ringgit Malaysia 10.28 million in its fiscal year end 2022, representing year-on-year growth of approximately 69%. This growth has continued in 2023, where in the first quarter ended 31st March, the PBT grew by approximately 28% compared to the same period last year to reach about Ringgit Malaysia 3.89 million for the first quarter of 2023. And if you believe that Catcha Digital Berhad is currently only at its beginning of an expansion journey with huge potential of an accelerated growth trajectory, this may present an opportune time for you to buy into Catcha stock in order to capitalize on the company's future potential and to ride on the fast-growing wave of digitalization. As usual, before you decide to invest into any securities or investment, remember to always do our own due diligence and invest into stock with position sizing in mind, as there will not be a 100% sure win trade or investment in this universe. Thank you, and may the good Lord bless you and your family abundantly, and I shall see you again in my next video.